How do you think the value of the money in your pocket is determined? Does the power of those banknotes end at your own borders, or do countries across the ocean move according to your currency? Today, even when the United States isn't at the table, why is the entire world speaking its language? Have you ever wondered why almost everything is calculated in dollars? The product doesn't pass through the US, the parties aren't American, yet the currency is the US dollar. Isn't that striking? Are you ready to discover the invisible empire of the dollar, why no one can easily escape this system, and whether this massive hegemony is starting to crack? Here is everything you've been wondering about. Let's dive in. Part 2. The Invisible Partner. On a crowded street in Tokyo, a boutique coffee chain orders beans from a producer in Brazil. But there's a curious detail in this commercial marriage. Neither the Japanese yen nor the Brazilian real is on the table. The common language of this transaction is the US dollar. But why? The Japanese company first converts its yen into dollars to make the payment. The Brazilian producer then converts those dollars into reals in their own country. The key point here is that at no stage of this transaction is the United States a party. The product doesn't cross US soil and the ship doesn't stop at an American port. Physically, America isn't at the table, but its currency sits right at the head. The trade happens through it. Let's look at the bigger picture. The dollar's dominance isn't limited to trade. Even when we discuss how wealthy a country is, its growth rate or its success report, our primary unit of measurement is the dollar. Countries don't hold their own currency in reserve for a rainy day. They hold those greenbacks. As of the end of 2025, 58% of global central bank reserves are still held in dollar assets. In other words, the world still entrusts more than half of its strategic reserves to this green paper. Countries even borrow and lend in dollars. Doesn't that strike you as extraordinary? With so many currencies available, why is it always the dollar? According to recent Fed data, 1 out of every 2 American banknotes printed circulates outside the US in the pockets of foreigners, and 60% of international payments are still conducted in US dollars. So in this new world where the US faces internal turmoil and global rivals, what does the dollar's hegemony actually rely on? Let's open the door and take a closer look. Part 3. The Architect of the System, Bretton Woods. To understand this story, we need to travel back to the final days of World War II, July 1944. The location, Mount Washington Hotel in New Hampshire, USA. The war was ending and the winners were clear, but the global economy was in complete ruins. In this environment, 730 representatives from 44 countries gathered to revive global trade and prevent future wars. Not everyone sat at the table on equal terms. The US was, as usual, the strongest player. Throughout the war, it had sold weapons and food to the Allies in exchange for treasury bonds and gold. When the war ended, an incredible picture emerged. Approximately 70% of the world's gold reserves were now in US vaults. Unbelievable, isn't it? A new plan was forged at the table with the US at its center. Naturally, the US had some conditions. Countries would no longer hoard gold, they would peg their currencies directly to the US dollar. The dollar, in turn, was pegged to gold. Countries began accumulating dollars instead of gold in their reserves because they knew that every $35 they held was equal to 1 ounce of gold in a US vault. Thus, the foundation of the dollar's reign was laid with those signatures. The world, by its own consent, declared the dollar the only common language of global trade. In the end, the winner was clearly the United States. At this point, I want to ask you, why do you think this happened? Who won? Who or who all lost? Did this situation always stay this way? Let's meet in the comments. Let's discuss this topic. Your ideas are always valuable to me. Part 4. The break from gold and the petrodollar. petrodollar. However, this system had one critical assumption: the US had to back every dollar it printed with gold. By the late 1960s, the US was struggling with budget deficits due to the Vietnam War and social programs. It was going through very difficult times. The amount of gold in the vaults could no longer cover the amount of dollars circulating in the world. Trust was beginning to falter.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators.
Many thought the system would collapse, but the opposite happened. In 1974, the US struck a deal with Saudi Arabia to ensure that oil trade was conducted exclusively in dollars. Thus, the petrodollar era began. Any country that wanted to buy oil first had to find dollars. The dollar was now backed not by gold but by black gold oil. Look how far we've come. With this decision, Richard Nixon declared oil the most valuable commodity after gold. Part 5. Why is it still the dollar? The 3 pillars. So why does the dollar still hold the #1 spot in the world? Let's look at 3 fundamental reasons. The network effect. When a currency has been the standard for decades and has earned global trust, major corporations continue to use it. It's just like why you use WhatsApp, because everyone else is on it. Any country that tries to step outside this system risks finding itself cut off from global financial communication. That's a massive risk. Everyone uses the dollar because everyone else is using it. Institutional trust. For foreign investors to trust a currency, they look at a country's legal system and property rights. The US system of checks and balances, along with the independence of the Fed, provides a level of predictability that ensures the money won't suddenly lose its value. Economic scale and liquidity. To be a reserve currency, you need a massive economy backing you. Between 2008 and 2023, the European economy grew by 13% in dollar terms, while the US economy grew by a staggering 87%. The US Treasury market is the largest, deepest, and most liquid market in the world. You can execute trades worth billions of dollars without even moving the price. Can you imagine the scale of that liquidity? Part 6. Exorbitant privilege and the risks. Now let's look at another perspective. How does the dollar being the world's primary currency affect the US itself? Like everything else, it comes with pros and cons. The biggest pro is that it allows the US to borrow money more cheaply than the rest of the world. Since everyone is lining up to buy dollars, the US pays much lower interest rates when it borrows from the market. This advantage saves the US government roughly $80 billion in interest payments every single year. You heard that right, $80 billion. On the other hand, a strong dollar puts a heavy strain on American exporters. An overvalued dollar makes goods coming from China cheaper for American consumers, while making goods produced in American factories much more expensive abroad. This leads to a decline in industrial jobs and a massive trade deficit. So while the US saves $80 billion on interest due to the dollar's strength, it faces a massive trade gap in return. Part 7. New rivals and cracks. So is the dollar's hegemony shaking? In recent years, rising powers have started seeing the dollar as a threat to their own sovereignty. Specifically, the US using the dollar as a sanctions weapon has pushed many countries to seek alternatives. In March 2023, for the first time, China purchased LNG from the United Arab Emirates using the yuan, completely bypassing the dollar. This was a symbolic blow to the dollar's dominance in energy trade. Furthermore, crypto assets and blockchain technologies developing independently of any state promise new paths that bypass the dollar-centric structure. Think of the global financial system as a giant game of tug-of-war. On one side, you have traditional trust and the network effect. On the other, the new ambitions of a multipolar world. Who do you think will win this showdown? Part 8. Closing and engagement. The story of the dollar isn't just an economics lesson. It's a summary of how the modern world is governed and how the balance of power is established. In a sense, whoever holds the most dollars holds the power. Perhaps one day, years from now, that Japanese coffee merchant and the Brazilian producer will settle their deal in another language with a different currency. But until that day comes, the dollar remains the lingua franca of the global economy. But what do you think? Can a real alternative to the dollar actually emerge? Will the Chinese yuan or decentralized cryptocurrencies end this hegemony? Or will the massive liquidity of the US economy remain unrivaled for years to come? I'm truly curious to hear your thoughts. I'll be looking forward to your opinions in the comments and I'll be reading them all one by one. If you enjoyed this video, don't forget to hit the like button and subscribe to the channel so you don't miss this deep dive analysis. In the next episode, we'll uncover another mystery of the world and the economy together. Thanks for watching and I'll see you soon.